Voila, we're live. Hello, everyone. It's 12 p.m. We're going to wait another 3 minutes to give some people some time. Also, for the people already joined, you have some 3 minutes to get a quick drink or something to eat. Make it yourself comfortable. So another 3 minutes and then we will start. Good. Maybe I will give you already some practicalities. It's are the usual ones that you're used to. So after the webinar, we will share the recording. That's automatically. And also tomorrow, I will send you the slides so you can also find them back and use the links that are in the presentation. Also, during our presentation, we have 4 topics. I will start with the TCO calculation for mobility budget. And I think that's the most important one, why most people are here. So depending a little bit on the time management, I will end part 1 and then do a short Q&A. So you can find the questions button at the right corner, the right bottom corner. So immediately put your questions there so we can already answer your questions after part 1. And then we will do some questions depending on time management. And after part 1, we will go to 2, 3, and 4. And we will do again a short Q&A after part 4. That can still be questions about part 1, but I think it's nice to have already a little bit a Q&A after part 1. So that are the practicalities. So the slides you will get, also the recording. So that won't be a problem, and questions can always be asked. Good. I've waited 2-3 minutes for the people to arrive or to get a drink or to go to the toilet really quickly. That's really quickly, but why not? Okay, good. Let's start. We cannot wait all day. So like I said, today we're going to talk about 4 topics. We're going to start with the TCO calculation for mobility budgets. Let's have a look. First, I want to start with the basics. The most important thing is that the law that has been published is clearly focused on the mobility budget. That means that you can still calculate a TCO that is not linked with this law, but then you don't calculate it for the mobility budget. So if you want to calculate the mobility budget, you need to follow these slides, this law. And it's important to have a total clear overview at the start to know what the TCO for the mobility budget is all about. So TCO, like we normally all know, is about the total cost of ownership. And we talk about the TCO 2. So that doesn't mean TCO 1, because TCO 1 doesn't cover all fiscal aspects. So we want to cover all fiscal aspects. That's why a TCO 2. And also not a TCO 3, because we don't want to deduct the indirect fiscal positive effects. Why is that? Because, like the definition says, the total annual gross cost of the employer needs to take into account. So it's the gross cost. And if we take TCO 3, we don't talk about gross cost. So we talk about the handed-in company car or the company car that the employee is eligible for. So also employees that are eligible for a company car can start with the mobility budget. So that's really the basics of the mobility budget of the TCO, total cost of ownership, what it is. And now, since the start of the 1st of January, the new law needs to be applied. What does the law mean? Well, first of all contracts that you made, so all mobility budgets that are active, keep their current contracts. So you don't need to adapt them to this new legislation. But if you have from 2024 some new joiners or some promotions, you will need to use this new calculation method or this communicated method. And you always need to choose 2 things or think about 2 things as employer. The first thing is, do I want to calculate my TCO per employee or per function category? You can choose that by yourself as employer. You can do it per employee. That will take some more time because, of course, you have more employees than function categories. And also, if you're going to calculate it per employee, it's most of the time linked with the real company car that the employee has. You can also link it with the function category or use the function category, and then you link it with a reference car. So a car that you will have a quotation for or that you find on internet. So that's the first choice that you need to make. Do I want to calculate my TCO per employee or per function category? After that, you have another choice, and the choice is which formula do I going to use? And that's the update of the legislation. Do I use the actual cost formula or the lump sum value formula? I will deep dive in that in the next slides. What is the actual cost formula and what is the lump sum value formula? But before I deep dive in those two formulas, it's important that the method that you choose, so do I choose per employee and actual cost formula, that it is a formula that will be kept in the company for minimum of 3 years. So you need to define one method, and the method is applied for 3 years. So maybe you, as employer, choose I want to calculate it per employee with the actual cost formula. And then after 2 years, it's a lot of work. Every time if a new employee joins, I need to really calculate a lot of stuff. We will see that in the next slide. I want to change my method to a per function category and a lump sum value formula. Well, that's after 2 years not possible because, like I said, you need to wait 3 years. So think about that. You're stuck with your method for 3 years. But there is an exception. An exception, you can see it on the slide. For people that are new appointed and people that have a promotion or job change that already have the mobility budget, it's not really possible to use the actual cost formula. Why is that? And that will be clear in the next slide. Because the actual cost formula is based on actual cost, like it says. And if you have a new appointment, you don't have those actual costs. You don't know how many kilometers they have ridden, or someone that has a promotion that already got the mobility budget. Also, here you don't know the actual cost. So there you need to use the lump sum value formula. But I will make that clear also in the next slides. Important to take away, change your policy. If you have already a mobility budget policy, rewrite it and make clear which method you are going to use. Because in the law, they say if you want to use the lump sum value formula, you need to explicitly write it down in your policy. So I would suggest to do it either way. So say I use that formula, I will use that formula, so you're covered anyway. So change your policy also. So good, I've already talked a lot about the actual cost formula and the lump sum value formula. So let's deep dive in those two formulas now. I also want to repeat for the people that joined after the start, you can ask your questions in the questions tab at the right bottom. And we will end part 1 with a short Q&A about TCO calculation. Then I will go further to part 2, 3, and 4, and we will do another Q&A. So feel free to already put your questions during the presentation so we can handle them depending on the time management, of course. Good. That's the basics of the mobility budget. Good. Let's see. You have chosen for the actual cost formula. I want to use the actual cost formula. The advantage of the actual cost formula is that it's really based on the current cost of the company car. So the advantage is that the employer of the employee, the employee will really see that the cost of his company car is going to be reflected into a mobility budget. And why is that? Because you need to calculate a lot and the actual costs are taken into account. If you're going to use the actual cost formula, it's important that you need to know is that you actually need to calculate 4 TCOs per employee. Why is that? Because the law says, well, we're going to use the average of 4 years. That means that for one employee, for one company car, you're going to calculate for 4 years ago, 3 years ago, 2 years ago, and 1 year ago, the TCO, and take the averages of that 4 years. The government says, well, we're going to do 4 years. Why is that? Well, if in 1 year the electricity costs are way high, well, then if you use that year, you will have really a large budget, and that doesn't reflect the real costs. So they want to really flatten down these extreme costs or really high lows. That's why the average of 4 years are taken into account. So feel free to you must use 4 years. But if you don't have data of the last 4 years, maybe the car is like 1 year old, you can of course use only 1 year. If the car is 3 years old, you only need to use 3 years. But you can already see that you need to find some data back. So that will take some time. And which data do you need to take into account in the actual cost formula? Well, I always say it, you can define it in 4 cost groups. The first cost group that you need to take into account within your TCO is the everything related to the car. So, of course, the cost of the lease renting, or if you purchase the car, it's 20% of the purchase cost, electricity cost, insurance cost, and so on. And like you see, within this cost groups, I put etc. most of the times, because there are, of course, more costs than on this slide, but I didn't include everything because that would make my slide a little bit dirty. So I didn't do that. But there is a link to our blog 2 slides further. There you can find the limited list of costs that are able to take into account. So that's a list that the government says, okay, these costs, you can take that into your TCO. But if you don't pay for them, you, of course, don't need to take that into account to your TCO. So it's a limited list. Why is that? Because some people maybe try to put some parking fines or some speed fines into their TCOs, and that's not possible. So they said this is the list, what is possible to calculate your TCO for, and then you need to look in the list which cost you all take into account within these 4 cost groups. So the second cost group is your charging station. Also here, take into account only 20% of your of the cost of the charging station and installation within the TCO. Also, maintenance and repair management costs can take into account here. Third cost group is all fiscal aspects. So we talk about CO2 contribution, road taxes, and so on. And then we also have other costs. Toll, parking fee, maintenance, and so on. But like I said, if you don't pay toll in your car policy, you don't take that into account in your car policy, of course, in your TCO. So you can already see that you need to look at the list. Which costs do I take into account? I'm going to calculate all these costs for probably 4 years, maybe a little bit less if you don't have data for those 4 years. So it will take a lot of time, but it will reflect the current cost pretty good. So that is what you're going to do. That's the actual cost formula, but also another option is possible, and that's the lump sum value formula. And let's have a look at the lump sum value formula. The lump sum value formula is a formula that the government gave as a simplification. They also saw that the actual cost formula, it's a little bit difficult. And also here, just to give you clarification, we have a TCO Excel file that you can use. Also, the link is 2 slides further to this Excel file. And you can fill in all your costs, and we will calculate actually the third cost group, all fiscal aspects, automatically for you. So if you want to use the actual cost formula, but also if you want to use the lump sum value formula, you can request that TCO calculator, and we will take into account the fiscal aspects. So you only need to take into account yourself the other costs that you pay, just to give you a heads up. But okay, let's go back to the lump sum value formula. Like I said, the government says, the actual cost formula, it's a little bit difficult. Let's make a simplification. And then they made this formula. And the lump sum value formula is separated into 2 parts, or in 2 methods, I need to say again. And that depends if you're going to rent your car or your reference car, or if you're going to purchase or financial lease your car or reference car. So let's say that you have a car that is rented or leased, or your reference car is rented or leased, then you're going to use the next formula. Also here you can see on the slide that you still need to do some calculation. You need to put the annual rental and lease costs plus the average other annual costs. What are the other annual costs? Well, those are the costs that you can also find. That's actually the limited list that I talked about. So also here, if you pay car wash, if you pay for maintenance, also here, all those other costs that are not included in the lease cost or in a rental cost, that are the other annual costs. And also here, you need to take an average of 3 years. Why is it here 3 years? And in the actual cost formula, you need to take an average of 4 years. I don't know, that's the law. It's a little bit weird, but that's what we need to do. So if you're going to use a lump sum value formula with a rented or leased car, you take the annual rent lease cost plus the average other annual cost. That is the average of 3 years, plus the non-deductible VAT, plus the tax on non-deductible car cost, plus the CO2 solidarity contribution. But like I said, the last three, if you use our TCO calculator, those are automatically calculated. So you only need to do those first two yourself. That's the fixed component of the formula. But also there is a variable component. And what does variable component mean? Well, the variable component means that it will depend on the employee or the function category. So if you use the lump sum value formula and you're going to have a rented or leased company car or a reference car, then you're going to calculate the fixed component. That will be the same. But then you have the variable component, and that will change per employee or per function category. And the variable component is actually the fuel cost. So that's the difference between those two formulas. The biggest difference between those two. So within the actual cost formula, you're going to really use the electricity costs, like you pay the last 4 years, the average for that employee or for that function category. And within the lump sum value formula, you have a formula given by the government to calculate your fuel. So what is the formula? Well, the formula, and it's a formula that you need to use if you use the lump sum value formula, so you cannot change that. So it's 6,000. 6,000 is 16,000 private kilometers, says the government, plus the commuting distance. So that's the commuting distance of your employee or the average of the function category, if you use a function category method. That's a one-way commuting distance because we're going to multiply that by 2. So also back, but the one way is the commuting distance multiplied by 2, multiplied by 200. The government says at average, you go to work at 200 days. So that's the amount of kilometers you've been riding, and that's been multiplied by 0.13. The 0.13 is also stated into the formula, and that's actually 30% of the allowance that the government pays to their employees for going to work. So that will change every year, but this year it's 0.13. So you need to use that variable component. So that means you're going to use the lump sum value formula. You have a rented, leased car or a reference car. You're going to calculate the fixed component, and then per employee and per function category, you will, of course, need to also use the variable component for the fuel. But then you can also have, of course, a purchased car or a purchased reference car and a financial leasing. And then the fixed component is different. And you will see that this is really a simplification. So the simplification here is that you're going to use 25% of the list value. So the list value is the value that you will find on your quotation or on websites like Direct Lease, plus the CO2 solidarity contribution, and then also the variable component, of course. So you only need to find the list value, the CO2 solidarity contribution, and then use the variable component. So you really see that this is a simplification. And that's the way that the lump sum value formula works. So the advantage of the lump sum value formula is that it's easy to calculate. So I would suggest if you, at the moment, have, of course, a company car in the company, because otherwise you're not obliged to start with the mobility budget. But most people don't have a company car. They are eligible for it, but they don't have it. Well, maybe it's just the easiest way of working is to have a reference car that you will purchase, and then you can just use 25% of the list value plus the CO2 solidarity contribution plus the variable component. And then you can really quickly calculate your TCO. But like I said, that's handy for people that don't have a company car at the moment, because they won't really see the reflection of the cost of the company car into the mobility budget. Because with this simplification, of course, that won't really reflect the cost of the company car that good. And if you will use an actual cost formula, or if you will use the lump sum value formula with your rented or leased option, then the cost of the company car will be better reflected into your mobility budget. So for people with a company car, that will be more feasible or more liked. But of course, like I said, you can choose. You choose Do I choose it per function category per employee? And then do I want to use the actual cost formula or the lump sum value formula? One method is applied for 3 years, but don't forget that if you have new employees and current employees that don't have that use a mobility budget and are getting a promotion, you don't have those actual costs. For those employees, you need to use the lump sum value formula. So that's a quick recap of those two methods. Is that all? Well, last slide of part 1. No, that's not all. Don't forget, what do you know? What is necessary? Well, first of all, the fuel costs for professional trips, those can be excluded from the TCO. And to be honest, I would recommend to do that always. Professional trips are really difficult to estimate, are really different per employee, per function category. So I would always exclude it from the TCO, and you can pay it back always on top of the mobility budget. But if you want to include it in the TCO, you can do it. But this is an option that the employer has. Then an own contribution needs to be deducted from the mobility budget. That, don't forget, always the case actually, but I like to repeat it. That's the second point is most focused on part-time workers. So if you are a part-time worker and you can only get a company car if you have a own contribution, if you pay an own contribution, then that own contribution in the car policy is also going to be reflected into your mobility budget policy. And so your mobility budget will be reduced equally to the amount of the contribution. And then at last, double counting needs to be avoided. I think I already said it, but if you have a lease contract or a rent contract and some costs are part, by example, the insurance is part of the lease contract, you of course don't calculate the insurance also with the other cost separately from the lease contract. So always use the lease contract and then also the other costs that are not part of the lease or rent contract. So don't double count it. That would be illegal. And like I said, more information, well, the website blog will help you, or TCO calculator will also help you further. Good. That was part 1 of the TCO calculation. It's 22. Like I said, we're going to do already a little Q&A. Let's see which questions we can answer. And after some answers, I will go further with part 2, part 3, and part 4, and then we will do another short Q&A. But then we can already have some interaction. That would be nice. Good. First question, can Umbrella help with this calculation? It seems very complicated, to be honest. Sophie, yes, indeed, we can help with that. Depends. We can always help. That's not the problem. The pricing depends if you're already a client or not and which client you are. But I can help. Also, another colleague can help. We will go into discussion which calculation method will be the most appropriate one and how are we going to calculate it. Of course, we cannot do it by ourselves, all calculation. By example, if you want to use the actual cost formula, we of course need to have data from your side to use in those calculation. So of course, feel free to contact us. Our email address or my email address is at the end of the slides, but also within the intercom of Umbrella, you can always ask help as well. Can we use the TCO2 that the leasing company calculates for us? Krista, indeed, if the leasing company is calculating in TCO2, you can use that. But to be honest, in practice, most of the time, leasing companies will calculate the TCO3. But if it is in your case, TCO2, that's perfectly fine. Another question, we have 3 cars to choose from per category. Do I have to take the average of the 3 cars? Well, the law says at the moment that it's really one reference car. So that they don't really refer to reference cars. So you need to choose one reference car per function category. So I would say the reference car then that is in the middle of those three, but you cannot take the average of those three company cars. So take one reference car per function category. Good. I think we only had 3 questions at the moment. So I'm already going further into part 2, part 3, and part 4. But feel free to also ask questions about TCO calculation, and we will handle them also after part 4. So that's not the matter. But I saw that at the previous webinar, it was nice to already have some interaction and to answer some questions about TCO calculation. So I will already start with part 2, and if there are some questions about TCO calculation, we will answer them also at the end of the webinar. Good, perfect. Let's go further. Mobility budget update. From the 1st of January, we also saw some updates of the mobility budget, and those updates are focused on 3 points. To be honest, those are quite small updates in the mobility budget, and we hoped with our lobby work to have some bigger updates. We didn't really get them, but okay, fine. Well, we got those 3 updates, and let's talk about them. The first update is that the yearly indexation of the mobility budget limits, or excuse me, I will start over. The mobility budget limits that we knew, 3,000 or lower limit and 16,000 or upper limit, are now yearly indexed. So at the 1st Jan of 2024, we have new limits, and those new limits are 3,055 and 16,293. Also here to-dos for you as client or as starter of mobility budget: adapt your policy. Most of the time in the policies, those limits are stated, so you need to change those limits. But also update your mobility budgets, and that's most important. So change mobility budgets that are lower than 3,055, change them to 3,055, because otherwise they're illegal. But also, on the other hand, if you have theoretical TCOs of 70,000, 18,000 of the really high categories, you can cap them now until 16,293. So have a look if you need to make some adaptations based on this indexation, but those are the new lower and upper limit. Then the second focus point, we have a clarification of Pillar 2. It's a really important one, maybe the most important for all clients and all umbrella, all mobility budget users, is that all expenses within Pillar 2 are now restricted to the European Economical Area. That means that you cannot use a taxi or a camper van in the USA anymore, by example. All expenses in Pillar 2 are now within the European Economical Area. Before that, it was only limited for public transport, but now it's for all expenses. So that's a limitation now within the mobility budget. So important things here to do: also change your policy, because it will probably only be stated with public transport. So change it to all expenses within Pillar 2. And also, starting from this month, if you have now an expense in Pillar 2 outside of the European Economical Area, you cannot accept it anymore. So don't forget that if there is an inspection that you don't approve it, you cannot pay that with your mobility budget. Then the second part of Pillar 2 clarification is the management costs. And actually, we did that already with umbrella, so you're normally fine with that. But now the management costs, so the payments of umbrella, the employee can choose if you want to reduce your mobility budget with the management cost, so the payment of umbrella, or not. But for the people that pay that ask the employee to lower their mobility budget with our cost, well, that's now part of Pillar 2. So the reduction of our cost of umbrella, if you pay it, if the employees pays it, it's part of Pillar 2. But feel free to, those costs can also be borne by the employer. That's also an option, but otherwise it's now a Pillar 2, but that is already the case in umbrella. So normally, no worries. Third focus point, not really important normally for the people that have joined, is an application of the mobility budget has been expanded. Now also mayors aldermen and deputies can use the mobility budget. So if you know someone, ask them, and maybe they can join Umbrella as well. So those are the people within the provinces and also within the cities. Good, that's the mobility budget update. Pretty short, but I think pretty clear. But if there are questions, let me know and we will answer them at the end of the webinar. Good. Then also kilometer allowance update. There are quite some updates about the kilometer allowance since it's the 1st of January 2024. And the most important is the bike allowance. I think most people know that since the 1st of January, the theoretically maximum limit has been increased to 35 cents per kilometer. Blows my mind. It's really nice that the government motivates us cycling to work. That's good for everyone. But don't forget, it's the theoretical maximum limit. So 35 cents euros per kilometer. Also, only if socially and fiscally exempt if you use the flat rate tax declaration. Most people are going to use the flat rate tax declaration. Some people, but I don't think there are going to be people here that use the real cost tax declaration. It's more administrative work. So normally you will have a socially and fiscally exempt 35 cents euros per kilometer. Also now, since 2024, there is a max of 2,500 euros per year. You can compare that to a one-way trip that is around 17 to 20 kilometers to work per day. Depends on how many days you go to work, but that's 17, 20 kilometers per day. So that's the limit, 2,500 euros per year. And an example of the maximum bike allowance is Paritaire Comité 307, the insurances. So within that Paritaire Comité, people have said or stated that we will use the maximum theoretical limit, and that's now 35 cents. So people that are working in insurance companies, they will now use 35 cents. But like I said, it's the theoretical maximum limit. So always keep the focus on your own sectoral or your own company CAO. By example, within Paritaire Comité 200, the current maximum limit that you need to pay to your employees is 20 cents per kilometer. So everyone in PC 200 needs to pay 20 cents per kilometer. At the 1st of July 2024, that is going to be increased to 27 euros per kilometer. So then the employer is obliged to give 27 euros per kilometer with a maximum of 40 kilometers per day. But that's a must. So the 35 cents euros per kilometer is not obliged for people in PC 200. But you can choose to increase now your bike allowance to 35 cents per kilometer, also tax-free. But you're still, if you're in PC 200, at the moment you need to pay 20 cents. From the 1st of July, you need to pay 27 cents, but you can already choose to give 35 cents. But that's an option, that's your choice. With the maximum of 40 kilometers per day, per employee. Good, that is the bike allowance for most people. And to make it a little bit more difficult, we have another theoretical maximum limit, and that is linked with the CAO number 164. What does the CAO number 164 mean? Well, maybe you were in a previous webinar of us where we talked about the mandatory bike allowance from the start of 1st May 2023. And that's the CAO number 164. So every company that before the 1st of May didn't have any regulation about bike allowance had to pay now a bike allowance from the 1st of May 2023. And their theoretical maximum limit is at the moment 27 cents per kilometer and will probably be indexed this year to 28 euro cents per kilometer, with also a max of 40 kilometers per day. So you need to see in which category you belong. Am I part of the CAO number 164? I need to pay 28 cents per kilometer. If I'm not part of that, I need to see my sectoral CAO. That will give me my details, what I need to pay, but I can voluntarily increase it to 35 cents per kilometer. That's a little bit now the bike allowance. Good. Then other allowances, a quick update. If you pay for private homework allowance in 2024, that's now 490 euros per year. So that means if an employee goes by private car, by a step, or by foot, or if they carpool, you can give the employee 490 euros per year tax-free. Then the costs for professional trips by car, by own car, is also been indexed. And then here also a separation is necessary. So some people follow the quarterly indexation, most paritaire comités. So also here, check your paritaire comité. And from the 1st of Jan until the 31st of March, this is 0.4269 euros per kilometer. But some paritaire comités, but there are not that much, use a yearly adaptation, and they are still on the 4280 euros per kilometer. So for professional trips, is this the allowance? And then to end the allowance part, we talk about also the homework allowance, because the best mobility is no mobility. That's a used sentence, of course. From the 1st December of 2023, this has been increased to 151.70 euros per month. So also here you can maybe increase that for your employees. So good, that's the information for the allowances. And then I still have a other update part. I won't deep dive in that other update, so we still have enough time for all questions. But let's see what I want to talk also about in this part. And the first thing is the tax credit on bike allowance. I think this is a really cool new thing. And like I said, within the bike allowance, you are mandatory in PC 200 at the moment to pay 20 cents per kilometer. But you can voluntarily increase it to 35 cents. And the government says, okay, well, we want to really give the advantage, or to get people more bicycle allowance, we will give a tax credit to companies that voluntarily increase their bicycle allowance. What is a tax credit? A tax credit, simply said, is a credit that you can have, so based on the kilometer that has been cycled. What means all cycled kilometers, you're going to declare that in your tax declaration, and then with the tax declaration, your tax income will be lower, and then you need to pay less taxes. So tax credit means that you need to pay less taxes as a company. That means if you voluntarily increase your bicycle allowance, that cost increase will actually be in null sum level with the tax credit that you get. But how is the tax credit calculated? We focus on the left part here of the slide. If you voluntarily increase your bicycle allowance, you can get a tax credit from the 1st Jan 2024 until the 31st December of 2026. And the amount is the formula that you see. So you're going to have an allowance minus a reference allowance. The allowance is the allowance that you are going to be given. So maybe if you're on PC 200, you says, okay, I want to give 25 cents. That's the allowance. The reference allowance is the reference allowance of the date 1st June 2023. And you gave at that moment 20 cents. You obliged one in PC 200. So 25 cents minus 20 cents is 5 cents. And you multiply that by the amount of kilometers that has been ridden, that's been riding by the employees. And that amount will be declared for a tax credit. So really the difference between what you give at the moment and that you voluntarily increase. But there is a max of 5 cents euros per kilometer. So if you currently give 20 cents per kilometer, and you want to give 35 cents, the theoretical maximum limit, there is a difference of 15 cents. Well, you only get a tax credit of 5 cents per kilometer. So 5 cents is the way to go to voluntarily increase, I would say. There are some conditions. Of course, the cost of the bike allowance must be borne by the employer. I think that's quite logical. Voluntarily increased doesn't need to be obliged. So it's a voluntary increase by the employer. A limited at time, so you cannot say we will increase the bicycle allowance for 2 months. No, it needs to be unlimited. And it needs to be at least 80 cents per kilometer to get a tax credit. So that's for the most company. I think a good benefit to give more bicycle allowance to your employees. And then also here, to make it also here a little bit more difficult, we have the CAO number 164. I will not deep dive in it. It's actually the same as a voluntarily increased bicycle allowance. But for those companies that had to start with the bicycle allowance, the difference, the reference allowance is based on the 1st July 2022. And normally your bicycle allowance was 0 because otherwise you're not in CAO number 164. So within the CAO number 264, you will have a tax credit normally of 27 cents multiplied by the amount of kilometers. And here there is a maximum of 20 kilometer one-way trip. So the logic is the same, but there are a little bit differences in the reference allowance and in the amount maximum. So I'm going to leave it there. If you want to have more information about that CAO number 264, feel free to contact me or us. But like I said, tax credit, I think it's really nice to give to your employees and to increase your bicycle allowance and to have an advantage for you as well as employer. So don't forget to ask that in your tax declaration. Last slide for today, really small. I also wanted to repeat that if you're self-employed in Flanders, don't forget that you can still have a tax reduction of 15% with a max of 1,800 for a charging station. So self-employed people in Flanders, I would say, still get your charging station because next year it will be 0. And then you have the normal adaptations of the solidarity contribution out of the benefit in kind. The coefficients have been changed. Also, the minimums has been changed. And the overall conclusion, like you know, is that if you're going to use a combustion engine vehicle, that it will be more costly, that more fiscal aspects will be paid. So your solidarity contribution for the employer will be higher, and a benefit in kind for the employee will be higher. So choose an electrical vehicle that will lower the cost, lower the fiscal cost, because we see that every year these coefficients will rise and also these minimums. So just to give you a heads up, also here, these changes of solidarity contribution and benefit in kind are of course taken into account into our TCO calculation Excel file. So don't worry about that. Good. That was the webinar. Like I said, and we have pretty much, we have quite some time. Last time we had less time. So we have time for some questions for people that already want to leave and go to the toilet and really have a talk with your colleague in the lunchtime. Thank you for joining us. Feel free to contact me. You will get the recording and you will get the slides, but feel free to hang around and to answer and to hear the answers of some questions that are still around. But thank you and see you the next time. Good. Okay. I see that Eva gave me an answer or a question, sorry, and she said it's already been answered. So, well, that's good. I see a question of Serena. Do we need to make all the adjustments ourselves, or is it automatically adjusted to the max amount of bike allowance? Do you mean within Umbrella or within the company, within the payroll? If you can clarify that, Serena. Thank you. Within Umbrella. So you need to adjust it yourself. So we have informed you within the platform that now it's the theoretical maximum limit is 35 cents. But of course, it's the choice of the company to increase the maximum limits. Because it depends on what the employer wants, depends on the paritaire comité, so we cannot automatically increase it for everyone. That would not be good for everyone, or that will not be linked to every need. So you need to manually change that. So you will go into the product and will increase, at the moment, maybe your maximum limit is 27 cents, and you will up it to 35 cents in one click. Normally, that's pretty easy, if that answers your question. No problem, Sophie. Have a nice day. Okay, but I think that's pretty much an answer for Serena. If not, I will be still around for some minutes. I also want to say for people that are still here, okay, Serena say yes. Okay, if there are no questions in the next 2-3 minutes, I will end the webinar here. But for the people that are still here, like I said, you will get the recording and tomorrow you will get the slides. But tomorrow we also include a quick feedback formula. And from the first part of the webinar last week, not the first part, but it's the same webinar, but the first webinar, we didn't really get a response on the feedback formula. So I want to ask you, if you get the email tomorrow with the slides, that you also fill in the feedback formula. It's a 1-minute feedback formula. We really appreciate it to get better and to know which parts were not clear or were clear. So I hope you have some time, 1 minute for me and for Umbrella to fill in that feedback formula as well. Good. I see that everyone said thanks to me. I think I'm going to conclude here. Oh, I see still a question. Okay, at last, Isabel has a question. Okay, I'm going to answer Isabel's question and then we will conclude. CO2 contribution is 31.90 for electric vehicles. What about the calculation for PHE for hybrid electrical vehicles? That will be that depends. Normally it will be the same CO2 contribution, because also here the amount of CO2 that you produce is not that much, so it will follow the minimum limit. Only if it's like a false hybrid vehicle, electrical vehicle, that really uses still a lot of CO2, then it will be higher, and that depends on a larger formula that I can give you, but I don't know it by heart, to be honest. Then it will follow a formula, and then it will be a little bit higher, the CO2 contribution. But most of the time for PHEVs, it will also be the minimum, like electrical cars. Okay. Good. I'm going to end the webinar here. So feel free to contact us if there's something not clear, and we will see and hear each other later. And yeah, have a nice day. Thank you.